Luis Gazitua, JAG Insurance Group, here with Carlos Garcia, Euler Hermes. You want to give us a quick 101 of what you do?
So what we do at Euler is we insure accounts receivables. We make sure that we protect people against possible bad debt.
That sounds almost too good to be true.
That's what a lot of our clients say, but we've been doing it for 128 years in the U.S.
One of the insurance policies that we've been discussing, and we've known each other for a little bit, credit insurance, account receivable insurance. Now it's even becoming more and more popular with all the phone calls, or I guess more of a hot topic per se. People, a little bit of the unknown in the future. Want to break down, Carlos, let me ask you, what is the market entry on credit insurance? How many businesses do have it now?
Right now, our market penetration in the U.S. is probably about 5%. A lot of people, they either got hit and they go out and look for it, or somebody told them about it,
right? Or
their bank has come in and asked them, hey, if you want this loan, you got to get this insurance. What's happening in today's economy with this COVID-19 is a lot of customers are actually calling us to try to protect their accounts receivables because they're selling on credit. And right now, you don't know who's going to be in business, who's going to go out of business. There's so many outside factors that could cause an issue. That's the biggest fear people have now.
So it's about wondering who's next, or when, if, and or am I going to be paid?
Exactly.
So it's more of the people who know about it. More in general, it's either they've had something happen to them specifically as a business, lender requirement, and or they were either a similar business had told them about that you actually can insure your receivables.
Right.
I mean, other than that, I mean, you guys are still writing business today, right now.
Right now, we're still taking new policies, renewing our existing portfolio. So yes, we have adjusted, who we're going to cover, who we're not going to cover based on our appetite for the risk. But right now, we're still writing policies. It just, things have, shifted a little bit because we're an insurance company at the end of the day, and we got to protect not only ourselves, but also our policyholders that currently have policies on these large exposures.
Right. But it's safe, I guess, and I want to make this as informative as possible, but pandemics in your policy form are covered. This isn't an exclusion of what's going on in the economy. So economic downturns, regardless, are going to be covered on your policies.
Correct. Right now, we do cover, so if someone calls us, to give you an example, and says, hey, I can't pay my bills, I don't have any more money to pay because this, COVID-19 has caused this mass hysteria, we do pay the claim. Okay. What we cover, the easy way to say it, is we cover the inability to pay.
Okay.
We don't cover, I don't want to pay because you sent me red cell phones and I ordered black cell phones.
Yeah, that's a normal business dispute.
That's a normal business dispute.
Okay.
But we cover the inability to pay.
And the only exclusions would be either war or natural disaster.
Natural disaster, correct.
So in your opinion, people don't buy this because they necessarily know that it exists.
Right.
And give me an example of like who would be a potential client? Is it everybody?
Anybody that's got an accounts receivable right now, or for that matter at any time, is a potential client. Okay. If you have an accounts receivable, you gave somebody 30, 60, 90 days to pay, and they don't pay, that's where our insurance kicks in and pays you 90% of the loss. Okay. It can be from somebody that's a distributor of flowers, imports the flowers from, let's say, Ecuador or Colombia. Now they're going to distribute within the U.S. and they're selling to grocery stores, other, smaller wholesalers. And now nobody knows if they're going to get paid or not.
Yeah.
Maybe the Publixes, Kroger's, those of the world, yes, they can sustain something like this. But as you can see, they're having problems getting things on their shelves. So what about a smaller grocery store chain? That's where you start seeing the real big issues and the big impacts of what can happen in a 30-day time span.
So is there, for someone that says, is there a number or a figure in your head for a business owner to say, okay, I write off X amount receivables a year, then I should buy the insurance? Is that kind of a train of thought, or is everybody?
That's your natural train of thought. Your natural train of thought is, well, I'm going to swap dollars. The insurance, if I lose $50,000 a year and the insurance costs me in premium $50,000 a year, then okay, I'm going to buy it. But we're not in the business of swapping dollars. It's more of a partnership, because we're not only an insurance company, we're also a service company. So we tell you, hey, watch out with this customer. Hey, this is happening. Hey, watch, there's a political risk situation happening in this country. There's a devaluation of the currency.
So it's a very proactive approach as far as who our insureds are doing business with.
Exactly. It's letting you know. We have a lot of real-time information. Right now, approving limits, we're running based on, December 2019 financials.
Right.
If you think about, in the grand scheme of things, of what's happening,
those
financials are pretty much obsolete at this point.
Yep.
Why? Because in 3 months, things have changed where, that cash that they had sitting in the bank might not be there anymore.
And just thinking about it, we've had these discussions. You're more likely, in any scenario, to probably put a claim on an invoice than to put a claim on your, let's just say, general liability policy, or even a fire or theft in your actual business.
Exactly. When I, put aside, the craziness that's happening today.
Yeah.
If you put that aside, and you say, okay, your normal business transactions, you have more chances of someone not paying you the money that they owe than you have a fire happening in your business, somebody slipping and falling, somebody, passing away, and you got to pay out a life insurance, for the key man life policies. Receivables, you might have 50, 60 people, if you're a domestic business selling domestically, or imagine if you're export selling all over the world, and those people have, anything can happen to them. They can have, anything can cause them to have a hiccup in their business where they can't pay those bills anymore. There's just unforeseen reasons. So,
too many moving parts.
Right. It's like, I tell my customers today, if I would have told you 90 days ago that the cruise line industry would be in the situation that it's in today, or the airline,
nobody would believe it.
They would have said it's impossible. Right. They would have bet against me.
Right.
And it's like going back, me telling my grandfather, hey, when I'm 40 years old, Sears Kmart will not exist anymore. It's impossible. Sears was what Walmart is today.
Yeah, and we're moving so fast too that with technology, that if companies aren't necessarily looking at new ideas or adapting, they could become obsolete. This insurance protects not you, but it protects your vendors or your clients from not being as forward thinking as you are.
Right. And you have access to real-time information. We monitor these buyers day in and day out.
I mean, and just layman terms, we have a policy in force with Euler, and we want to onboard a new client. I mean, you guys will vet that client, kind of grade them as far as what you see in the market, whether they're a good risk or not.
Absolutely. We do it on two scales. One, we vet you as a policyholder, that you're a legitimate business, stuff like that. Then we vet each one of your buyers. Okay, what is their ability to pay? So when we vet those buyers, most of them receive what's called an ADT, which is an automatic decision threshold. Okay, where you can put in a request and you'll receive an answer instantly.
Business as usual.
Right.
Okay.
You'll receive, you get the credit approved, and you move on, and you start selling to that business. And the day that there's a problem, okay, which is we give you 180 days from the ship date. Okay, so you have 6 months to decide when you're tired of dealing with this situation.
Right. Because if you do put a claim, you're basically
your relationship with that buyer is over.
Okay.
So we do give you that flexibility. It's not something, right now we're granting a lot of extensions. Customers that, for example, that are selling into the cruise line industry, they're not coming in and saying, hey, I want to file a claim on Royal Caribbean. Right. They're saying, hey, Royal Caribbean's going through a situation. These invoices are coming past due. Can we get an extension? And absolutely, our claims department reviews the situation, issues an extension, and we move on. Our goal at the end of the day is for everybody to get paid and for the insurance not to have to pay out. But like any other insurance, that's the reason why people buy it, is for when these situations happen, for you to get paid. We're not here to insure the house that's already on fire. We're here to protect you from the house that could catch on fire.
It's really creating that peace of mind. You're basically taking control of all these things that aren't in your control. and economically in different countries. Like there's such a, you're mentioning it earlier too. It's if you're in the line of 60 people on an invoice, how do you know you're not on the top of the list? Depending on the level of priority or how important you are to a certain client, you might not get paid.
Right. Like if you look at a grocery store today, if you walk into a small mom and pop grocery store, I can guarantee you if you sell paper towel, toilet paper, eggs, things like that, you're getting paid first.
Right.
The things that are on the shelf that are not moving, those things are probably not on the priority list to get paid right away because they need the cash flow to move these other products.
Right. It's a level priority. Right. They got to restock the shelves.
Right. And nobody knows where you sit on that priority list until we have a situation.
Let me ask you, is there anybody that's non-insurable?
What do you mean not insurable?
Is there anybody that you can't, like for example, not insurable, but is there anybody that a policyholder can insure against? Maybe the government.
Well, yeah, right. We do insure governments, okay, but there's some government entities that you cannot insure. For example, a doctor. A doctor, even though he's got an accounts receivables insurance against the insurance companies,
right?
Okay, they're usually never going to buy this type of insurance because it's saying, is Medicare going to go out of business, or are they just going to delay the payments a little bit?
Yeah.
So that's an industry that it's not very typical to buy the insurance to insure an entity of the government.
But it's always business to business, though.
It's always business to business. Anybody that's got business to business that generates an accounts receivable, we're in the business of looking at the transaction and seeing if it's insurable.
Even today, for example, how long would it take to get a quote even in today's market with everything going on?
Anything under 20 million today, you can receive a quote instantly.
Okay. It's one of those things where 5%, I think, is market penetration. It's still very surprising to me. It's one of those things that even now, with everything not being covered, this is the one piece of mind that really, I think, is going to be an eye-opener for most people. We'll continue to push it, and I appreciate you, obviously our relationship already with our existing clients, but I appreciate you, coming on and giving a little knowledge as far as your product stuff.